Oh, shit. What is going on, everybody? Why is this not tilting? Okay, that's fine. Hello. I hope you guys all had a great, fantastic weekend. We're back for another stacked week of live trading, daily education, all that sort of stuff. I'm happy to be back with you guys and cover price and walk everything like a dog. Let's get after it. Let's get after it. How is that the first question that you ask? When is giveaway? Giveaway is at the end of the stream, and it will always be at the end of the stream. Focus on price right now. Focus on the charts. Let's talk charts. Giveaway later. Damn. First question I get. When's giveaway, sir? Bruh. End of the stream, giveaway. All right. Who took shorts today on indices? Anybody take shorts or capitalize on the shorts that were taken today? Let me know. Let me know. Okay, I'm going to share this in my Discord. Get more people in here. Okay. All right. Come hop in live at everyone. Okay. No one took shorts on indices today? We're going to see probably on NQ this 4-hour untapped gap all the way down here. Well, we're going to reach the same thing on the Dow Jones. Probably going to see this daily low resting here is my guess. But I wanted to cover and talk about the shorts on indices today and talk about what price did and the actual opportunity of execution. I personally didn't take a trade today or took anything on index futures. The move was very fast and it happened like that. So it wasn't something that I couldn't have capitalized on because it didn't really match my entry functions that I needed for requirements. Everything from the higher time frame was lining perfectly though. Like everything was great. But let's go over and look at this from a higher time frame perspective from actually why price went lower. So I'm going to clear out a lot of this and I'll mainly leave. Let's clear out. Let's just look at the daily time frame and just compare and contrast what's going on here and why shorts were even a thing. So if you guys already know this, what's the first thing that we're kind of looking for on a daily or a higher time frame perspective? Is there any cracks in correlation in price between anything in the triad here? So the first thing that I noticed when I went into today was seeing an SMT at the previous daily highs with the ES, the NASDAQ, and then the Dow Jones here creating this lower high. So the Dow tipping its hand, showing us that we would be going lower with this SMT set in at the previous daily high. This is also an SMT at all of these highs as well, because you can see NASDAQ and the S&P 500 has just been clearing them while the Dow Jones has been the weakest out of the three. So that's the first indication of bearish sentiment in the market, looking for shorts into that day. Now going down to a lower time frame, we were on the daily chart. Look at that 1 hour, because the 1 hour is the alignment from the daily. So this is exactly what was going on the 1 hour. So coming into the day, I'm going to replay price too. right? Let's get this replay. Boom, right there. All right. And let's do it one more candle. One more candle. All right. So let's zoom in price a little bit more. 8:30 high impact news didn't do much today. It was like core retail sales price was like that news was honestly irrelevant today. So coming into the day and seeing how we had that SMT at that previous daily high, just like this, looking at what I could be utilizing for a draw on liquidity for the day, seeing a session low, aka Asia lows. This was my draw on liquidity for the day, moving down to these resting lows because one, there was nothing holding price higher here. There was an hourly fair value gap or 2 hourly fair value gaps on NQ within Asia's session. But the fact that NQ and ES have yet to take out these session lows led me to believe that NQ or ES was going to take these session lows and catch up to the Dow Jones because the Dow gave that daily SMT divergence, that cracking correlation at that daily high. So knowing that that was the case, what I wanted to see was 9:30 open. Give me an idea as to what could happen next, or what can I do next in regards to price delivery. So let's go to like the 5-minute chart from the hourly and see what 9:30 did, just to see like where could have price allowed me to get into a trade. So this, again, I didn't take this. I really should have taken a trade on the Dow Jones, and I'm pretty upset that I missed this move. But I'll show you exactly why I went hands off on the Dow. And I'm actually going to do something really cool, really as well. I'm going to mark off the previous daily low as well here. So let's go back to the 5-minute chart. Oh, why did it not do the replay? Go back here. Let's do this. Okay. So previous daily low was right here on YM being the weakest pair. Now let's go to 9:30 open and see what happens at this point. Right here. Boom. Look at the Dow Jones here in comparison to NASDAQ and the S&P 500. Dow Jones strength, NASDAQ weakness, ES middle time. Now, this move here was, in my opinion, a nice manipulation play. Why? Because we did not close above this high resting here, and we held in the SMT at the previous daily high. So knowing that we still had that lower high set in at the previous daily high from Monday, my idea was that this to be a manipulation to then go to previous daily low, and then the NASDAQ and the S&P 500 to continue lower and follow suit with the Dow Jones. So skipping through price a little bit more, let's go one here. Look at the Dow. What does the Dow do here? And what do you guys know about the forever model? We have a run of an external high, and now we have a closure below this this up close candle here. That is a bearish order block resting there. Okay. But assuming, and what happens next, the next 5-minute candle trades so far much lower. Like literally, like there's no chance that price is going to tag this order block here. No. And I'm also going to flick back to NQ and go over that as well. But I want to show you what my mindset was going on with the Dow and why I didn't take this. The next 5-minute candle here, this candle opens up and takes out the previous daily low resting here. This was my draw on liquidity, and this was where I wanted to see price take out after me getting a tag of a bearish order block. Because if you look here closely, look at this candle as well. This candle right here. This candle also does what? It clears out liquidity like this short-term high here, this short-term high here. This candle clears out those highs, and then we close below it. But we get the tag of that order block here after we ran out that liquidity pool. So once we cleared this out, we took out the low, and then we tagged my entry that I would have wanted to get in before. I took off my limits and I let it go. And obviously me letting it go was a mistake because price ended up bleeding and then clearing out the Asia lows that I wanted. And then we had the Dow Jones cleaning and running lower. So what are you going to do? But that was not something that I wanted to see. I wanted to get in before those lows were taken. And then once those lows were taken, I would have adjusted and put my stop immediately to break even, or at least take like a piece off my position there. Now for the NASDAQ and what I saw here. So if I go to the hourly chart, you guys look closely here. What do you notice on NQ's hourly chart here? And if we just look and focus on NQ and ES, look at this little hourly fair value gap resting here. Notice how there is a higher low set in. We tag that hourly gap here on the NASDAQ. We don't tag it on the S&P 500. Again, this is just classic forever model executions, narrative to execution. Hourly fair value gap, SMT inside that fair value gap, boom. Then you look for lower prices. What is your question? Oh, so hold on. I did not trade London. Come on, Shun. On the breaker here. See, I would have taken either the breaker, the inverse fair value gap, or the order block, but I would have taken it if we didn't take out that liquidity pool before. I don't want to see price take out that low. Like here, hold on. Let me go right back again really quick. Like, see, here's the closure right here. I would have wanted price to retrace. I would have executed off of the breaker, or I would have had my limits higher. Realistically, I would have had my limits higher at the order block resting here or at the inverse fair value gap. But I would have had my limits at the order block, and then I would want to see price come and take out that low. And then I would have jammed my stop loss back right here to break even after taking out that low. So it was valid, but I didn't like the fact that we took the low out and then it gave the entry. That's what I didn't like. I don't want that. I want price to give me the entry and then we hit the target, not hit the target and then go to the entry. You know what I mean? That's what I don't want to do, because price could reach the target and then reverse and then go back up higher. And I'm not willing to take that risk, especially the day before FOMC. I'm not doing that. So again, I'm still leaving this week right now. No trade Monday, no trade Tuesday. I didn't take anything yesterday, didn't take anything today. It didn't hit Asia lows before that breaker tap though. Wait, this was Asia lows were already taken on the Dow here. Or, unless you're talking about taking a breaker short on NQ. Sean. NQ is on the left, YM on the right, ES is in the middle. You could see based off of the numbers here. This is 24,000, this is 46, this is 6,600. No, you're good, bro. You're good. I mean, I'm still going to look for trades. I will still look for trades tomorrow. Don't get me wrong, I will. I looked for trades yesterday. I looked for trades today. The bias, in my opinion, today was very, very clear and very obvious. Lower prices were clear as day. It's just a matter of the fact that I didn't get my entry because I didn't like this. I wanted to short the Dow because this matched my entry function. But again, like I said, my entry would have been short like this, like here at my up close candle that ran the short-term highs, stop loss covering either the body or covering the high of the candle. Most likely, since it's a decently sized candle, I would have had my stop loss at the body high and then targeted a 1 to 2 just like this. But since we cleared out that resting low first and then gave my entry, I canceled my limit, and then price still ended up playing out to where I wanted it to go to, you know? So if we did not take out the low before giving me the entry, I would have been in this trade. But since we did, I didn't take it and I went hands off. But am I going to bitch and moan and complain and stuff like that? No, I'm not. I'm going to be on the side and just respecting my rules and being completely okay with whatever price wants to give me. And so be it in this situation, just wasn't my thing. Oh, the low. So this is the low that I was talking about. That low that was Monday's low. That was previous daily low. Go to the daily chart. It was the low set in from Monday. That was my target. Resting right there. So I saw this hourly structure. We had the 930 open, come up, sweep this high. We held that SMT set in here, and then price ended up blasting lower. And that is how the cookie crumbled. And I wanted to show you guys as well NASDAQ too. So NASDAQ and the S&P 500. So look closely here. Now, look at the hourly gap with the SMT, higher low resting here on the NASDAQ, lower low resting on the S&P 500. So 5-minute chart. This was that SMT resting like there. This low here and this black line is Asia lows. Let me replay price again. Go down to that low run. This is Asia lows. And let's focus. Now, seeing kind of how price was at the open, like we had the SMT set in prior, but the 925 candle did what? We kind of displaced lower right before 930. Right before 930, and then we had, at least for me, I didn't have my candle that I typically use, like I showed you guys on the Dow Jones resting here, a candle that clears liquidity, and then we close below. But this would have been like a technical breaker entry because of the SMT at the highs. So that would have been something, I guess, to execute on if you got in off of this closure below here, this change in save delivery with your stop loss just resting at the high. The only thing here is that you would have had to execute literally right at the open. Like opening price comes in and you're in, like you are in the trade immediately, which is very, very fast. But if you look at a 1 minute time frame, like you would have gotten in legitimately at 930 with your stop loss at the high. That's exactly what you would have to do. And 99% of the time, I don't really do that. I don't like executing right at 930. I like letting a little bit more time settle in, because who knows if price wants to sweep higher into that hourly gap and then like create another sweep while we still hold SMT with ES. That's also possible. ES also had like this up close candle here that I was looking at for an order block, but also didn't give the tag in. So that was another miss for me. So I thought that today was very clear, but I just didn't get what I needed on NASDAQ. And unfortunately, the Dow Jones missed my criteria by a little bit, a little bit. But overall, it was a very clear, easy read on price, in my opinion. But again, like day trading, it's normal. It's so normal for you guys to miss trades. Like it's fine. The only thing that you should be doing is making sure that you are being structured and following your rules, because when you like don't feel comfortable, you get pissed off when you are missing trades. That's when you are going to go outside of your rules, and then you will start tilting and going against what you know works. And that's when you're losing. You're going to lose that way. You will lose if you go outside of your checklist. And then it's going to hurt even more because, well, if you are journaling your trades and you go into your journal, you see all of your wins that replicate, and then you see your losses that don't replicate because you just couldn't have that emotional discipline to stay dialed in and execute based off of what you know for X, Y, and Z. Which pair do you like to trade in futures and why? I like to trade primarily it's the NASDAQ or the Dow Jones. I'm hardly ever taking trades on the S&P 500, but you can take trades on any of the three. And like, if I had to give a rule of thumb, I always say this, like my A+ setups from my model, an A+ forever model setup is longing the stronger pair of a tag of a fair value gap that has SMT. And A setup is longing the weaker pair that tags a fair value gap with SMT, and then vice versa. The same thing with a B+ setup, which is a run of an external high or low. The stronger pair of that is a B+, longing that, or longing the weakest pair after running an external low. That is a B setup. It's the same thing. But a majority of the time, it will either be NASDAQ strongest, Dow weakest, ES is in the middle, or NASDAQ weakest, Dow strongest, ES in the middle. That will be a majority of how price will be, like 99% of the time. And today it was like Dow showed its strength in the beginning, NASDAQ showed its weakness, Dow gave the manipulation, and then followed suit and gave a bloodbath. I don't trade support and resistance, but technically, like, any sort of strategy works as long as you have a certain edge that you can solidify based off of collected data through your journal. I'm not saying, and I won't say anything on other people's strategies, because if you are somebody that comes into this business and all you do is say, this is the best strategy, this is the one with the highest win rate, this is the one that works the best compared to anyone else. Anyone that says that doesn't make any money from trading, and they never will, most likely. And they're most likely just trying to sell you something. If you are trying to persuade the masses to move them away from some sort of topic to go to theirs, that person is a bozo. And they have not and will not make a single dollar from trading. I will never, there's support and resistance traders or people that trade bull flag or the falling wedge breakouts that probably make 1,000 times more money than me. Or trend line traders. That doesn't affect me. Like, my life and my way of trading is in my own path. I have no business caring or wondering what somebody else is doing or pocket watching somebody else. That is not on my agenda. I'm way too busy to care about any of that sort of stuff. A lot of you guys are talking about gold, and I'm going to cover that too. We got beat down pretty hard. I can see this on silver and gold. You lose too much to entry? I was bullish on NQ from the 4-hour fair value gap. Yeah, I8, you got to be started off on the daily time frame. Note any cracking correlation on a daily time frame and then go down to the 4-hour and see what happened next. Don't let the 4-hour push you away from the time frame above that. Every time frame above that one time frame that you're looking at will always be subordinate. So there's an SMT on the daily, a bearish one. Don't flip bullish on a bias just because you see a 4-hour fair value gap tag. That's only gonna hurt you. So gold, I could see gold being a slow moving day or stay within like I would say small daily candle size, leaving behind a daily bullish fair value gap for tomorrow for FOMC. Like I would more so like gold to not do anything more for the rest of the day, close as a doji, and then come down into this daily gap tomorrow. And then also silver, if you look at this, if silver can come down and clear this out and take out the previous daily low, then you would have a situation where tomorrow you can get an SMT like this on silver and an SMT like this on gold. Failing to tag out the Monday low, we'll have a Monday low of week, and we expand from here, creating an SMT like this. And then for the people that have swing accounts, or if you have your like a personal account, take a daily to a 1 hour setup off of this daily fair value gap that has SMT if silver can clear out the Monday low like this. So you would want to see something like this. Come down like here, come into that daily gap, clear out Monday's low, then go higher. While gold fails, we tag this daily fair value gap here, create an SMT, and then go higher. We also have an SMT down here as well, too. So my analysis on US 30, I was bearish. I did give out the analysis a little earlier. I'll give it out again. So I wanted to see lower prices because of the cracking correlation at the previous daily highs with the NASDAQ, the S&P 500, and the Dow Jones. So we had this lower high set in right here from Monday, higher high on ES, higher high on the NASDAQ. I wanted to see price go lower, low-hanging fruit being the previous daily low, which is what we took out. Only thing that like kind of stands out to me is the Thursday low on the Dow Jones. But what stands out to me as well on the S&P 500 is this daily fair value gap here. I think that it's time for indices to see a pullback and price to go lower. It is time for a retracement, in my opinion. I want to see price to go lower, create some sort of external high to leave behind so that we have a future target for an external high to look for when we want to long again. We have been at all-time highs, just ripping consistently. Look at the NASDAQ, just daily chart. When was the last time that we took out a previous daily low? Last time we took out a previous daily low was September 2nd. September 2nd. Every single day since then has just been higher lows, higher lows, higher lows, higher lows. It's time that we see something lower. And I think that FOMC tomorrow will bring that. And that's what I want. I really, really want that. I want FOMC to come in, do some damage, bring us lower. That's what I want to see. And at a bare minimum, I would love to see the S&P 500 come into this daily gap. And then maybe we could target the Monday low from NASDAQ here at 24,317.5. Like that would be good. I would like that. But it's also really depending on what is price going to do when we reach this 4 hour fair value gap. That's also aligned with an hourly fair value gap here. That's my idea as of right now. But I do like seeing how price is kind of giving up the ghost to go lower before FOMC. That's what I really like. I like that a lot. It's giving me confidence that we're going to go lower. Or we're going lower today to then blast off higher tomorrow. From last week and Friday's daily gap. Yeah, it did play out really well. Yeah, that did play out really well, actually. This was like really, really nice. This daily gap here that had the SMT here, and then the opening from Monday was beautiful. I think a lot of people in my Discord caught the longs here from this hourly order block on gold down here that swung into that daily external high. Silver also had a really nice move yesterday, sweeping out Asia lows to then going to the highs. That was another one that was nice. It was a closure above this down close candle here, and then it was a call out long to right there to this resting high. It was literally a double purge. Shout out MMXM. Cleaning out this low to then take out that high, and then using this down close candle as support to go higher. That was a nice play. I prefer SMT inside of a fair value gap. And if you want to like be more intricate with it, wait for a swing point to occur inside of the fair value gap. But SMT inside of a fair value gap is the highest probability. Is the highest probability entry mechanism because one, again, I went over this like on the first stream that I did. Like price does what? It does impulse, retracement, impulse, retracement, impulse, leaving behind an external high, retracement, retracing into a fair value gap, and then impulsing off of that fair value gap to target that external high. What model do I trade? I trade the Forever model. That's my model that I founded and made. Is PSP worth looking into? Yes. I think that it's a valuable, I think it's a value, and as well as sequential SMT. I think both of them are good. You learn my model on my YouTube. I have like a 45-minute long video on my YouTube that is like a webinar breaking down the entire process to my model. Yeah, I don't have that on my chart. I saw people have that too. Unless you have regular trading hours on, or your contracts don't auto rollover. No, Luke, I might get a mod to ban you from this chat. Don't ever say that again. Look at the timestamps of my upload and look at the timestamps of his. His following is bigger than mine. It is what it is. I am the founder. And if you guys have not already done this for this stream, and again, FOMC is tomorrow, a big day to pass accounts. Use the code NEWBGF for 60% off all of the evaluations for Blue Guardian. So if you guys have not already stacked on your futures accounts, do that before FOMC. Do that before FOMC. I am making sure that you guys do it too. And it's specific to using it during this stream too. My favorite, I think that Blue Guardian is the easiest one to copy trade on. Because all you have to do is click a button, click your leader, and then you have follower accounts that follow that. And you don't need to, it's so much easier than doing it on like Tradeabate's copier, because you don't have to, like, let's say I'm copy trading 20 accounts on Tradeabate and I have like my Tradeabate copier. I have to put in, like, if I want to buy one contract across all my accounts, I have to do 20 contracts. So in Blue Guardian on their platform, all you have to do is the exact number for just the one account, and it still copies through all of them. So if I want to buy one contract, all I need to do is hit one, and it'll still copy it through the four other accounts. So it's easier to do it that way rather than if you have like 7 accounts and you want to buy 2 contracts on TradeAvate, you have to put 14 or whatever it is. I think that is just the easiest way to do it. And it has the best copier. And it doesn't ever fuck up either. And I will still stand by saying that it's the most user-friendly platform. Well, I think this is actually what I think is really going to happen. Like, silver is giving a big bleed down right now. I really think that this is going to be the play on. As long as gold doesn't bleed through and close this daily gap, then we're going to reach this gap on silver. If silver gives up the ghost, then we're going to get a nice fair value gap tomorrow on gold, and then we're going to go higher. I think that this is going to be a good one. They're running a really good promotion right now, and it's not going to be that cheap forever. So take advantage of the sales while they go on. What's up, Karen? You're trading the forever mob, but you're confused trying to build my daily buys. Today, simple example. What did I explain today? I'll clear off all my drawings, start from scratch. How did I explain the bias for the day? What did I do? I'm looking at NASDAQ, ES, and the Dow Jones. I'm comparing highs and lows. I'm comparing, is price trading into a fair value gap? Is there an imbalance that I could potentially target? Is there a clear draw on liquidity for me to look for on any of the 3? First set is cracks and correlation. What is the differentiation between price right now? Differentiation between price right now is the SMT that is set in at the highs. That is the only thing that is there right now. Right here and here. That is it. Now, since that I've set in a SMT at a previous daily high, that is my daily bias to look for bearish structure on the intermediate term time frames, aka the hourly chart. Daily, 1 hour, 5 minute time frame alignment. I'm literally showing you how to find the right bias right now. Just sit back and listen. Like, literally get your notepad up, record this, or rewatch the recording a million bajillion times, because this is legitimately free gold, even though it's on all of my YouTube videos. We found our crack and correlation in price. The SMT at the previous daily highs. Think about a daily candle and how it forms, or a singular candle. How does it form? It has an open high low close, or an open low high close. How did price move to start the day? What did it do? On NASDAQ primarily and the S&P 500. What did it do? We had an open. We are setting in a high. Open high. We're trying to go lower to reach a liquidity pool objective to then close. Open, high, low, potentially close after we reached out that Asia low. And where are we opening and we're setting the high? We're setting in the high where we are creating an SMT. Indication that we will be having a bearish sentiment for the day. Open, high, SMT at the high, price go lower. Now, after we found that daily bias and we understand that we're looking for bearish structure, because we also had a untaken session liquidity pool, aka Asia lows, just like this. What happened moving before New York open at this hourly candle, resting right here? We had the same sort of thing. What did we do? What did we do on the daily time frame? We were looking for a crack and correlation on price at highs and lows. We are doing the same thing here, the same exact thing. Cracking correlation at any highs and lows, but also within fair value gaps. Fair value gap right here. We had an hourly fair value gap on ES, just like that. We didn't tag it there, but we tagged it here on NASDAQ. Therefore, price allowed speed lower to clean out the Asia lows in just like that. Speed. We had our open high and low to then most likely close around here or within this hourly gap here. And the initiation and the spark that drove price lower was from the SMT in that hourly gap. And then you go to the 5-minute chart. The 9:30 open was the only key time that you could have actually gotten in for this trigger. I wanted to take a short on the Dow Jones, but again, like I showed you guys before, I didn't because we reached my liquidity pool objective before giving my entry. So I did not take a trade today. But the entry function for NASDAQ was legitimately right here, but at the open. Like literally, you would have to be very quick on this, executing at the closure when price ran below here at 925, 930 open, runs up, tags it, and goes. And your stop would have to be resting right above here where that SMT was placed. Okay, shorting at all-time highs is that's literally nonsense. That's nonsense. If you say you can't short at all-time highs, that's just a incoherence to understanding simple expansion or creating a proper daily bias. You can short at all-time highs. You need to know when the proper time to short is. Like yesterday was not a short. Yesterday was a clear and obvious long. Why? Because there was an SMT at the previous daily low with the Dow. Now, with this, there was an SMT at the high with the Dow. Therefore, price went lower. All you're doing is framing and understanding how is the daily candle going to form. Are we opening lower or are we opening higher? Are we opening lower, creating an SMT, or are we opening higher, creating an SMT? That's it. That's literally it. Nothing complicated, no enigma secret sauce formula that I'm trying to spew out. I'm literally just trying to give you guys free game that should help your trading tremendously. Like literally, look, what happened yesterday for people that wanted to short at all-time highs? What was yesterday? The exact same thing. Why did we go short today? SMT at the previous daily high. Why did we go long yesterday? Boom. Higher low, resting here. Lower low, resting here. Price expanded. And blasted at the open. That's it. That is literally why we went higher. You're not shorting this. This is a long. People that don't understand that and that are telling you don't short all-time highs don't have a grasp as to how price really moves. And the same thing today. Why did we go short? Boom. Cracking correlation here. Price is down and looking for retracement lower, trying to rebalance imbalances. Whoops. Sorry, not sorry. Is this kind of making sense to you guys? I'm sorry I had to bash your mentor like that, but oops. Can we enter before 9:30? Yeah, you can. You can execute before 9:30 as long as you have a comfortable stop loss. Like, I was looking at this. Like, if I went through before 9:30 open, I was looking and was going to, but again, I wanted to wait for 9:30. See this candle here? And see how we had an SMT. This is the SMT above at the previous daily high. If I executed short here and I have my stop at that candle high that ran this short-term high here, like this would have been a good enough stop for me to take because it would have pretty much covered the SMT that was set in at the daily. So if you wanted to take a short here, this would have been valid. It's also lined up with an inverse fair value gap as well. So we had a 15-minute fair value gap here, and then this is also a 15-minute inverse aligned with an order block, also aligned with a breaker. And then I would have targeted Asia lows just like this. That would have been if I took it on a 15-minute perspective before 9:30. I was looking, I was going to do this, but I didn't have the cojones to pull that trigger, unfortunately. But it is what it is. I always got another day tomorrow. Oh, my prediction on gold tomorrow will stay at this. This is exactly what I want for gold. I really want this. These two. Daily fair value gap on gold. Monday's low, daily gap on silver. I want that. I want that. And I think that this will be a good trade. A failure to take out Monday's low on gold, a takeout of Monday's low on silver. Am I trading tomorrow? So I came into yesterday looking for a trade. I came into today looking for a trade. I'm going to do the same thing tomorrow. If price gives me an opportunity to get in, I'm going to get in. It's just a matter of the fact of, is it matching everything that I need to match for my entry model? That's it. Like, it's not rocket science. If price gives me an opportunity, I'm going to get in. But if it doesn't, I'm not. You know? Of course, yeah. Cleared up. Thanks for me. I'm happy to hear that. So I actually have called out the resting highs. I've been long on euros since this daily order block. And literally, this is the same entry function based off of what I showed you guys before. But this is a monthly to a daily perspective. Monthly to daily. How crazy is that? We have the same. So if I go down and show you guys this is literally my forever model, but in a B+ rated setup. So if I look here, we have an SMT at the monthly lows with the dollar index and GBP USD. Look at these monthly lows here, lower low on GBP, higher low on the euro. Now, if you go to the daily, what is the forever model? We have a down close candle that runs a short-term low, close above it, and then that is our order block. Boom. We have a down close candle resting right here that clears a short-term low, and then we close above it. What happens? We literally kiss that order block and we go. It did take a long time, but we finally reached our monthly external high. Very, 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 very simple and easy objective point with a bearish sentiment on the dollar index. I have not been wanting to trade euro except for swing positions on this thing, primarily because this has been in a daily consolidation for the longest time, practically all of August and moving into September. Like, it just started moving now, like all of this through August. I feel bad for Forex traders. Like, you guys would be headbutting a knife if I was trading this. Yeah, I'd rather eat nails for breakfast than trade that. Yeah, but the sentiment on euro is clearly long, and now most likely euro is probably going to go up to this monthly gap here, and I'm assuming we're going to see 190.86. 198.6. So the correct, or at least my version of a high probability order block, is an order block that does something in regards to the price delivery. It has to clear a resting liquidity pool and then close above its opening price like this. This candle here does what? Exactly what I said in every single other trade breakdown that I've ever posted and every single other trade that I have taken and posted on Twitter. We have a down close candle that manipulates price, clearing out resting liquidity like this. We have an SMT divergence set in at the lows resting here. So we have a displacement reaction after closing above that candle's opening price. We come down, the wick does the damage, tags us in right there, and then price expands away from that POI. That's it. Very, very easy. That's the forever model in a nutshell. That is the forever model in a nutshell. Yeah, no, I'm happy you guys like the streams. I mean, it's very easy for me to talk about this stuff because I've been doing this for 6 years, and like I don't have to blink an eye. I feel like I'm reading a script whenever I talk to you guys because everything just flows, because it's just like this is just what I do and what I've been doing for so long. So once you get enough reps in, and once you like understand how price moves and what you're looking for on a day-to-day basis, it doesn't matter if you miss a trade. It doesn't matter if you get stopped out of a trade. It doesn't even matter if you win a trade. Every single day, all you're doing here is you're just showing up for work. You're pretty much just doing your business and you're getting off. But the thing is with us, our work is not all day. Our work is an hour to 2 hours a day. I don't spend more than 2 hours a day on the charts. Like literally don't. I do not trade all day. I would do a lot of nasty shit than trade all day. Like fuck that now. I want to take my money and get out. It's just business. You're showing up to work and then you're leaving. Well, that's it. And once you know what you're looking for on a day-to-day basis and a week-to-week basis, that's when trading just gets boring. Like I know that if I don't catch my trade within my certain time window, I'm on to the next day. And that's how all of you guys should be too. If you miss your execution, you see price reach your objective point, and you don't know where price can go to next, that's your sign to walk away and do something else. Indices are much better and will always be better than any other market. And no one can tell me otherwise. So Matt, can this trade be a journal? Yeah, 100%. You guys don't understand this. Even before in the past, or even sometimes still, I would literally journal every single day's price action and a daily recap on NASDAQ and the S&P 500. And I did that for 2 years straight. Like literally logged every single day's price. What trade was there the day? What trade did I take? What trade did I miss? All that sort of stuff. Annotated everything. And that was one thing that pushed me closer to getting to a point of profitability, because I was getting so accustomed to recognizing certain patterns. And that's also how I refined my edge in my trading to understand what to look for and what not to look for. That's also me putting the pieces of the puzzle together to get my model as perfect as I possibly can. So you got to do the things that what no one else is doing. So if you really want to get good at this shit, take it seriously, then do stuff that the 1% are doing and what the 99% aren't. I'm happy to hear that, bro. So if you're on the daily, go to the 1 hour, or you could also go to the 4 hour too. Whatever structure looks the best. Whatever structure looks the best. But it is 11:55. Let's do a giveaway now. 1 second. What? Okay. Let's do a giveaway. But now I need to think of a word. Oh, I have a good word. And the winners that get this right are the ones that I actually fuck with. That would have been a great one. We're gonna give away 3 50K accounts. All right, hold on. I need to figure out how to do this. Let's say, where is this? Let's see. I'm trying to figure out how to do this giveaway tool so that you guys believe me. All right, how do I do this? Yeah, I literally have no idea. I'm just gonna do it how I usually do it. I have no idea how to do this. Let's do 3 winners for the 50K accounts, and they are going to be drum roll, please. The first 3 people to type the word Zin get a 50K account. Let's see. Yeah, nope. Zin with a Z. Nope. No one's getting it correct. Oh, snap, bro. Fix that, bro. Snap. Come on. Yes, I see some fellow degenerates in here. Let's go. Sipta. That's the first one. Sipta. Nico. And Nate. That's what I like to see. Bingo. I love it. Z-Y-N. Get with the picture. That's how you spell Zin. Bro said Zine. Yeah, okay. Z-Y-N. So those 3 that won, open up a ticket in the Blue Guardian Futures Discord. You will get your accounts and you will be all set and ready. We did a giveaway every single day last week. We're going to do a giveaway tomorrow. We're going to do a giveaway Thursday. And Ralph's going to do a giveaway Friday. It's literally giveaways all week, every stream, trading, education, the whole 9 yards. Nobody does it better than Blue Guardian Futures TV. Dead ass. Honestly, I don't think anybody provides more value than we do. This is undefeated. Undefeated. But anyways, I hope you guys all have a great rest of your day. Good luck, good trading. If you do take anything for the rest of the day, I wouldn't advise you to do that. I wouldn't. But I'm doing another giveaway tomorrow. I'm not doing another giveaway now. Take care, y'all. be safe, and bank out tomorrow for FOMC. Pick up those accounts with that code new BGF2 before FOMC. Take care, y'all.